Hey, in this video, I'm going to teach you all about equipment financing, right? And just like the name sounds, equipment financing is used to purchase equipment. It could be trucks, trailers, kitchen equipment, manufacturing equipment, you name it, it falls under that. As long as it has something to do with your business, it's going to benefit the business, and it's over $15,000 as a purchase price, you can get equipment. It doesn't matter if it's new or used, right? And now here's the reason why you want to use equipment financing to purchase equipment instead of some of the other programs like working capital. One, when you use equipment financing, it's spread out over a longer time with monthly payments. So it's typically anywhere from 1 to 5 years. Okay. Next, it only reports to your business credit, so it's not on your personal credit. So it's not going to impact your debt to income ratios, which is really, really important. All right. And now let's talk a little bit about some of the tricks about equipment financing. If it's a used piece of equipment, it has to be worth the price that you're paying. Also, it's very hard to finance older pieces of equipment that are older than 9 years old, because a lot of them don't hold up in value, right? So if you're going to get a used piece of equipment, try to get something within at least 9 years or younger, and make sure it's worth what you're paying for it, or you're getting it for a discount, right? And now, a few things that underwriters are going to ask is, well, how's this piece of equipment going to impact your business? So you need to know, hey, this is going to help me make 10% more, 20% more, or it allows me to do this type of certain job. That's very important with equipment financing. Now, what are the qualifications? Basically, you need over 600 credit. The higher the credit, the better the terms you're going to get. Some underwriters won't underwrite unless you have a 680 credit score, but we have some that will work with 600 and above. Typically, the terms are going to be anywhere from 1 to 5 years, monthly payments, and some of them even have prepayment incentives. So if you pay early, they'll waive some of the cost. You know, the cost usually runs in the teens, maybe low to mid-teens, and it usually takes about 3 to 5 days to get done, from application to your equipment being purchased for you, and then you getting the equipment. Now, what do you need to apply? You're going to need an application, 6 months of business bank statements, a tax return, and then financials, and the invoice, right? The invoice of the piece of equipment that you're going to get. If it's used, you can get a purchase and sale agreement. And if it's over, call it 100,000, you might need 2 years of business tax returns, 2 years of financials, because it's a higher purchase price. They're going to look for more. They're going to look for more when they're underwriting your file, which is normal. All right. Now, once you apply again, it takes 3 to 5 days. And again, the benefits of this are it's going to use your business credit. It's going to be reported to your business, and it's not going to tie up your debt to income ratio. And it's a longer financing program, so the payments are going to be less. All right. If you have any questions, drop them here, and I'll see you on the next video.